All right. Well, hello and welcome everyone to your midweek currency room. This is Ankit here, and as always, here we are looking at the markets midweek, taking a look at how things have moved so far. Especially as we had a plan going to this week, we looked at everything in our currency room. So this is where we get to sort of see how things are coming along, and do we need to make any adjustments? So let's go through and do a little top-down analysis. We'll take a look at broader markets, see what's really moving, what news is really moving the markets, take a look at currency baskets, and then we'll get into some setups here.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So let's get into market analysis and take a look at what news of the week. And you can see so far, this week has been a bit of a back and forth. So we had a nice little pullback yesterday in the markets, and then we have a bit of a rally today. And you can see that whenever you get that kind of price action, you get a lot of risk on and risk off. This is where things are kind of moving in sync with the broader market sentiment. So yesterday, dollar was actually a good long position. We had the yen being a good long position. And then today we're seeing the opposite. So market just continues to go back and forth in that way. Now, outside of that news front, we had no changes from RBA, which was again expected. So from the news front, we really haven't had, a big news event that will really move the markets one way or the other. Overall, I think market does a very good job at pricing things in. We had the numbers today, the ADP employment data that was higher than expected. We had the services PMI. That was slightly higher than expected. So overall, you can see that we have this government shutdown that is extended. It's going to be the longest shutdown in history. And, this is the impact of this. We'll find out once the shutdown is over. We get more data. But so far, as you can see, market's kind of holding up really well. So not a whole lot of concern over there. And eventually, this shutdown will come to an end, and we'll get to a normal schedule where we get all that other government data, which we are not getting for the last few weeks. So based on that, let's take a look at how things are moving from on the percentage change. As you can see that so far, where's the best movement in dollar and the yen? So this is a pretty good risk on and risk off environment barometer. You can take a look at, is it a safe haven currencies where the money's flowing, or is it the other way? And one thing to note, remember, Swiss franc has been acting as a nice safe haven currency, and it's not really. I mean, take a look at the Swiss franc today, so far this week, it's actually down for the week, considering that we had the dollar and the yen being up. Just to kind of look back at the data, the Switzerland CPI came out on Monday early morning, and that was actually much lower than expected. I think it was like negative 0.3. So that number is actually really low, instead of going higher inflation, we're getting lower inflation. And remember, we talked about this where we're getting distorted data out, everywhere. Some economies are showing hotter inflation. Some economies are showing lower inflation. So it seems like that's very distorted. But that is going to be important because that's how some of the monetary policy is going to be guided. So you can see that Swiss franc is coming back. And I will be taking a close look at Swiss franc here and see if there's any rotation happening here, any key levels to watch for. Now, euro is the one that I was watching. Hasn't really broken yet. So let's pretty much leave the euro on the sideline here. And the pound is the one that is in a downtrend, getting a bit of a rally. So far, this one is still remaining weak. The Canadian dollar is also lagging here. Compared to the dollar and the CAD. I mean, dollar is definitely the leader here, and CAD is kind of fallen behind. And again, if you look at the data from Canada, there's a lot of negative data that's been coming out. GDP is negative. Employment report is not that great. So again, this is where we I think we'll probably see Canadian dollar struggle a little bit here. Now, we talk about these divergences. You'll hear me say that quite a bit as we take a look at some currencies that are usually positive correlated, and then there are periods where they actually deviate from each other. And usually those are the great times to look for, to look for those traits. And you can see Aussie and Kiwi are very much they deviated from that. And when we take a look at the chart, you'll see that we are sitting at almost a 10 plus year high on the Aussie Kiwi pairing. So definitely there's that divergence taking place there. Overall, you can see that the theme is really the dollar and the yen. That's really where the money went. And pretty much as the markets are roaring back today or having a bit of a rally, then you're seeing the money coming out of the dollar and the yen. So that's really the main driver. And always you want to take a look at what's driving the markets. Where's the biggest move? And you can see dollar and the yen. Those are the two pairs where most of the movements have been. Now, outside of that, you can see markets still down slightly with that recovery today. The World Stock Index, same thing. We're having a big move in crypto. And remember, it's something we talked about in the last few weeks where we were pointing out the relative weakness that's in the crypto market. And you can see that that weakness continues. And when market dipped yesterday, crypto actually took the bigger dive. So this is a good tell where something should be up and it's not, then it's likely to be heading lower. So crypto markets don't look good over here. I think I saw Bitcoin that fell below the 100K. And if you've been trading crypto since last year, we haven't really seen crypto go down below that's 100K mark. So a bit of a change there. Gold, remember gold, we talked about parabolic move, and all that air has kind of come out of gold, and it kind of become more normal movements now. It's only down 0.48, so nothing a whole lot happening in the gold markets, and oil markets is down as well. So in the broader market barometer, there's not a whole lot concerning. Decent moves across the board, but you can see that the Bitcoin, Ethereum actually is down the worst, and remember Bitcoin was the best cryptocurrency this summer. That's really where the money's coming out of. Now let's just take a look at our outlook here. Like what happens, when we get these pullbacks, is anything changed? So this is where we talk about trends. We are still holding on to that prior the resistance, which is now the support. As you can see, the price action has been pretty lousy for the last few days. But we're still holding it above that level. So usually these are the good way to kind of see, okay, where we are. Usually when the market's in an uptrend, pullbacks get bought out. Now, same way, when the market's in a downtrend, these little rallies get sold. That's a pretty good distinction between those two trends. And you can see right now we're still above the 20, still above the 50. So the market stays resilient. Now, can you say that this seems like it's kind of it's getting a little weaker in the short term? Absolutely. But I think this is still not a good indication on where the trend is. The trend is not turned yet. We haven't made a lower low and a lower high. These are still in this little higher trend. So, I don't really expect a whole lot of change unless market really changes with that trend. Now, when we take a look at the schedule, and usually this is where we get a lot more news catalysts, a lot more movements. You can see some of the data still is tentative, like the U.S. employment report, still tentative. I don't think that's going to be released unless the shutdown is over. Now, we are getting some other data. So let's just go over one by one. We got the Swiss franc CPI. Remember, this is the one I was talking about. That was down 0.3%. I think this is sort of weighing down on the Swiss currency here. Now, ISM manufacturing out of the U.S. was weaker, but then the services PMI today was stronger. So we're seeing the services doing a lot, picking up more than the manufacturing. Here's the employment report today. We are added like 42,000 jobs. The expectation was about 32, so slightly better than expected. Nothing really from the the RBA. We got the Kiwi employment report. Nothing too major there either because unemployment remained the same, and this was slightly weaker, but nothing too much on this employment front. So the Kiwi numbers are kind of stagnant here. Now, we still have quite a bit to go through. Tomorrow, we have the Bank of England. Now, question is, hey, the pound is actually being really weak. Is this a good time to enter new shorts? And I think this is where I'll take a look at that chart on the pound, but I'm paying close attention to not just what the number is going to be, because we already know they are not going to make changes into the rates. Now, if their number comes out, or if this changes in the bank with the votes, we might see a bit of a leaning, more dovish. But I think overall, it's a statement that we're going to take a look at and see what are they expecting for future rate cuts. And remember, like the last inflation number came out, and that was actually much lower than expected. Similar to what we saw with the CPI in the Switzerland, we saw weaker number out of UK as well. And I think that's going to put a lid on, hiking or, being the hawkishness is more on the dovish side. So that's the one we'll be preparing for going into tomorrow. Then on Friday, we have the Canadian employment report. Looking at the expectation, not really looking at a better number here, 7.1. But overall, we'll take a look at CAD and see which way we want to play. But really looking at that comparison, dollar against the CAD, dollar seems to be clearly on the positive side here. And I don't think we'll get this data out of the US. It will get released. So unless that shutdown comes to an end. So we'll take a look at those things. But this is how we're going to plan our remaining part of the week. So based on the velocity scores here, you can see things are, let's go back to here. Here we are with the velocity. As you can see, things are kind of all over the place. Now, one thing I've talked about, over and over is, trade with the trend. And a lot of times, these pullbacks or these bear rallies kind of gives you good opportunities. And I think as we had the market sort of have a bit of a pullback here, if the market does rally, I won't be surprised that yen actually underperforms. So I'll be taking a look at yen short in the next couple of days, as long as markets hold up. We had the CAD over here underperforming as well. So again, we take a look at CAD on the downside as well. Now, pound is slightly weak, but I think if based on that number or report tomorrow, I wouldn't be surprised to see a bit of a push in the pound either way. Now, Swiss franc and dollar, they're slightly negative as well. So we'll take a look at some of the Swiss franc pair as well. Now, on the right side, you can see even the Aussie is really the only currency that has done well. I wouldn't be surprised that eventually Kiwi catches up. But again, this is where timing those things can be a little difficult. But that's why we always take a look at those currency pairs. We'll take a look at Aussie and Kiwi and see which one is likely to lead other. So let's just jump into possible trades ahead and take a look at things. This is where you can put things in the chat box if there's any pairs you're looking at, any questions that you have, and I'll go through it as we go through the charts over here.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So let's just jump into TradingView and take a look at things one by one. So as we are with these markets here, you can see this is what I was talking about earlier, is this risk on or risk off environment. Yesterday, you can see the market did underperform yesterday. We had a bit of a pullback, and that really sparked some of those risk off moves. As you can see overnight, pretty much the market had recovered a lot of that move here. So the market went from a risk on to a risk off. Now, so you'll see the same thing when you go into currencies like the Japanese yen. What do you see over here? Well, as the risk off move was happening, yen was strong. And as soon as that is over, the yen is sort of pulling back. So I want to point everyone to the daily chart. And what you see on the daily chart is very repetitive, where you're seeing rallies and then these rallies are getting sold. In hindsight, we're still making lower highs and lower lows, which means the trend is still pretty clear on this to the downside. So as we get this pullback over here, which kind of reminds me of here, remember we got a very nice short off this little rally there. So I still like the yen to the downside here. And again, when I take a look at the charts now, the daily looks more clear as we get a big reversal candle. The question is that where do you want to look for setups? And 4-hour, maybe on an hourly chart, I can see a better setup here. We got a nice reversal here. We got a breakdown here, getting a little bear rally. And I think hourly chart maybe give us a better indication on, the next setup here. So yen, we'll probably look at the downside. Now, the dollar, I remember I've been very bullish on the dollar for the last couple of months, as you can see in the hindsight, where, being on the dollar long has been the right play. But this is definitely a slow move. I mean, you can see we have a nice 5-day run over here. We got above the resistance, but we get a lot of these choppiness and pullbacks in between. And I think this is where you have to really pick the right time frame and timeline for those trades. But dollar, it looks like it's pulling back a little bit. I would be surprised we see a little bit more softness. But just keep in mind is that it's still in an uptrend. This is an hourly chart, and you can see this is still kind of holding that level. But again, if I have to really compare, do I like the dollar or the yen? Take a look at dollar yen. I think that kind of gives you an indication on which way, you like that direction. And, when you look at the daily chart, it clearly tells you that dollar is still outperforming the yen. Now, let me show you the other chart that I was looking at is the Aussie Kiwi. And remember, this is the one that it really surprises me, because when you go out in the longer term time frame, and you notice that it kind of moves in a band. There's a band over here, and you can see it has rolled over in this band for multiple times. Last time, this band got stretched way more in 2022. And after that, you can see there was a big correction there. Now, the question really over here is that, are we entering a new stage? Are we going into a new level where, it actually going to establish a lot more new highs? Or is this a level you really need to be cautious about? So again, whenever I see these levels, especially when they date back, I'm more cautious on this and say, well, is this going to really break? Are we going to see 118, 122 on this? Or do you think market's going to fall back, or the Aussie Kiwi? So really, this is the big question here. We got a big range here. Remember last time we were kind of in this range pretty much from 2014, 15 to now 2025. So that's a long time. And you can see a lot of predictability, around this level was pretty common. And same thing around the support line. It never went below the parity, and it just stayed between that. So if you're trying to decide between the Aussie and Kiwi, keep a close eye on the Aussie Kiwi, because if there's a flip, if this turns, then clearly we want to make that switch and go with the Kiwi, even though Kiwi doesn't look the best. If I see a switch happening, then I definitely want to be favoring the Kiwi over the Aussie. But right now, as you can see, Aussie is still a clear winner here. It looks very extended. I mean, if you really look at things from even from these RSI perspective, and it's actually pretty interesting. If you go on a weekly chart, you see where the RSI is, and then you actually go back in time and see what was the last time we were at this RSI. This is a very extreme level. I mean, as you kind of hover back, I mean, this takes you all the way back to 88. This is again way before, a lot of us been trading for that long, and you can see that's really the extreme reading that we are getting in this Aussie Kiwi, and these are the extreme readings that sometimes kind of makes you nervous here. So now this is the one I want to kind of show that, especially if you are trying to decide between the Aussie and Kiwi, keep a close eye on the Aussie Kiwi here. So that's the first one here. As you take a look at things from the basket perspective, if the risk on sentiment is happening, what's a good long? A lot of time we've got to answer the question. Okay, I like this to the short side. I like the yen short. Then what do you want to pair that against? What's the best one you like on the long side? You can see that Swiss franc has sort of bucked that trend a little bit here. I mean, I'm still flabbergasted with like how how good the Swiss franc has done in the last few years. So for now, I think it's kind of changing that momentum a little bit with a softening CPI. But again, if you look at the daily chart, what you notice is that we are still between the 20 and the 50. I like the fact that this one did not act as a safe haven currency as much. I mean, we got a little jump here, but then that got shorted pretty quickly. I think it might be worth taking a look at a break below this 50-day moving average. So still very smaller percentage move, but again, these are the levels where a break of certain levels will accelerate that move. So I think it's worth taking a look at Swiss franc here. Euro hasn't really bucked the trend there. You can see euro is more flat or sideways, versus Swiss franc was more directional and now is actually turning back. But out of all, like the what's the best one that I like? I think that is the pound. And let me tell you why. I talk about how consistent that resistance level is, and it has really reversed every single time. Now, the weekly chart, I don't really trade the weekly chart, but we can go out to see, okay, what levels we are at. And I think this one looks very interesting to me, because as you look at the chart, we have been in an uptrend in the pound overall. And this 50-day moving average has been acting as a nice level of reversal. 1, 2, 3, 4, multiple times you can see that it has bounced. And right now it is not bouncing here. So that's a good sign, especially if you're looking for a change in the trend in the pound. And I think this is the reason why I like the pound to the short side, because if this is actually about to change that trend, then we want to make that pivot with it. So this is where I'm going to add an alert to notify me if it breaks the support. But again, it broke to that, it went down and it's holding that level. That's a good sign. Now, tomorrow when we get the Bank of England, if you're looking for the second stage entry, look for this previous low to be broken. I think that is going to be the biggest tell there. And after that, I think it'll be an easier trade, because then it's going to be behind, way past a certain support level that is really holding the currency up. So clearly, a pound also goes on the top of the list here as on the downside. Here we are with the CAD. And what do you see with the CAD? A lot of choppiness, a lot of indecision here. This is not the best looking chart that you want to trade from a trend perspective, because clearly you don't see a trend. So whenever you see something like this, you got to pretty much trade it day by day. I mean, take a look at these wicks over here. It's not the strongest currency. It's not the weakest currency. Probably better left alone. The Aussie is the one that I think still looks good on the long side here. Right here. You can see this thing is still holding up. But like I said, the big question is, do we think that the Kiwi could make a turnaround? So let me show you where Kiwi is at. And it's interesting where, we almost gotten below or to the level where we had a big reversal back in the April here. So this thing has also been making lower low, lower high. And you can see that this level is finding some support here. So I think Kiwi could be at a little cusp here. I don't really love, again, if you look at this level here, I wouldn't really want to initiate a short, especially if there is going to be, risk on rally continues and then we see a bit of a bounce here. I think these are the levels that you want to be a little bit more cautious on. And right now, as you can see, it is sort of reversing a little bit here. So these are the good times to take profits and sort of reevaluate. And then again, going back to the whole Aussie Kiwi thing is going to be something that I'm paying close attention to. So, keep that in mind in your analysis when you're looking at these things. So let me know if there's any other pair that you're looking at. We clearly looked at what we like. Pound Kiwi, I think I'm looking at. Let's just say that if there's a trend change, then what do you see in a trend change? You see this, in an uptrend, you see both pullbacks to buy into. Now, similarly, in a bearish trends, you want to see bear rallies to short into. So just based on that daily chart, pound Kiwi is actually setting up for a nice short. And I'll be pretty sure that pound Aussie is probably looking good as well. I mean, yeah, take a look at that. Pound Kiwi got a bear rally and holding it there, and then pound Aussie is kind of making a low base here. So again, if we broke that trend, now we're just in a holding pattern. I think this is the levels that I will be taking a look at for a break of that. I mean, I love the fact that it did had a big drop, but then look at that, it's gone sideways for almost 10 days, almost 2 weeks of sideways move. Again, good opportunities to sort of accumulate, a position, as it gathers more energy, the bigger the break comes. So I really like this pound Aussie. Like I said, I won't be, I'm undecided between the Aussie and Kiwi, and I can also take a look at the pound Kiwi as well with a stop right above this level. And then you got a first target at 2.28 and then a further below. That's the one that we really like here. Let's take a look at some of the other pairs. So we got the dollar that's holding it as well. So let's just see how pound dollar is doing. As you can see that thing is clearly now making lower lows. Getting a little bounce over here. But again, you can see that these things have sort of bucked that trend. Now, other currencies that are also turning around. Here's the dollar Swiss franc. As you can see that. I mean, look at where we were early this year. Almost here. And where we are now, a lot of congestion where we were, but I think it's kind of coming out of the congestion. Look at the last 4 or 5 days, 1, 2, 3, 4, 5, 6 days. We're getting a nice little move here. So any pullbacks, again, welcome that move. But then I think what we're looking for is that is it going to sort of pull back and maybe take another run? I think it's worth taking a look at some of those currency pairings. As we take a look at the yen, dollar yen, like I said, I still like it on the long side. You can see from the daily chart, dollar yen still looks good. The question is, what's the holding period? Here's the 4-hour chart. You can see we did come all the way back to the prior resistance, which is support. We are right against the resistance. So the first level of resistance is 140.54.50 area. But if it clears that, the next level of resistance is really at 158. So again, there's a decent room for that to run as well. So if you're looking for a setup, again, I'll look for this level to be broken. There's a resistance here. Let's actually redraw the lines over here. Grab a horizontal line here, and then let's just put things right over here. So like if it does break above that, I think I do like this on a 4-hour setup here. So dollar yen again goes on the top of the list. We got the pound Aussie, we got the pound Kiwi, and we can also take a look at Aussie yen. You can see that was in a hindsight of things, it did pull back, but then look at the big reversal that coming. So overall, it's still holding above that 20 to 50. We got a resistance right up here at 101. And I think break above that would only open some of the doors. Let's take a look at Kiwi yen. Again, not so clear, but you can see that 88 to 89 area would be the next level of resistance for this to break. So really, those are the things that I'm taking a look at. If you are looking at anything that you like it, let me know. I'll take a look at it. But remember, it's all about finding out where is the movement happening. We can find a lot of great setups. The question is that where the movement is? And if the answer is no, then it's better to kind of look for where the movement is and you trade that movement. And every week, the narrative changes. Sometimes one currency is more hotter than the other. So you really have to be sort of adjusting and adapting to the changing market environments. But overall market volatility, I would say, still remains low. We have some pockets where things sort of spike up, but then it just settles down right after that. So it's not really a lasting volatility. It's a very shorter term volatility. All right, so let's just wrap things up over here. BOE rate statement tomorrow. I think that could be a good catalyst if you're looking for the second stage entry in pound. I'll be taking a close look at pound Aussie, pound Kiwi. Those are the ones that, or even pound dollar we can take a look at. That's the one I'll be looking at. But again, focus on that currency and the relative strength and, trade accordingly. And then pretty much you do rinse and repeat every single week. All right. Thanks everyone for joining. See you in the next one. Happy trading.